Hello everyone, warm welcome to Regulatory Bodies YouTube channel by Testbook. My name is Madhav Sir. I welcome you all in a very important session which is related to a very important term, that is GDP. I'm pretty sure you must have heard this term, that is GDP, which obviously stands for Gross Domestic Product. But whenever we talk about GDP growth estimates, it is basically the expectation that how well the GDP is going to increase in the upcoming financial year or maybe in the future financial years as well. But the question is, whenever we calculate GDP growth estimates, this calculation is done on what basis? Secondly, what is the role of base year while addressing the term that is GDP estimate? Lastly, there is a news recently that government is trying its level best, or government is in a review to change the GDP base year. When base year is revised, after how many years the base year is revised, what is the current base year in order to calculate the GDP values, and what is going to be the next base year? All these questions will be answered in this particular session itself. But before I start the discussion, I will be sharing this session with my friends on my different platforms. I would request you as well to share the link of this session with your friends so that more and more students, they can join us live in this session itself. Once you have shared the link with your friends, just give me yes sir in the comment section and do let me know that audio, video, everything is clear, we are good to go, so that we can begin the discussion without any further delay. So first of all, if you are not aware of the term GDP, undoubtedly that question will be answered, or I would be starting this session with the answer to that question itself, that what actually GDP is, how GDP is used to calculate national income, as well as we'll discuss what are the methods followed in order to calculate the GDP value. So before we start our discussion, quickly copy the link of this session, share it with your friends so that more and more students, they can join us live. Quickly guys, let's begin the discussion. The moment I say GDP, I hope you all are very well aware that GDP basically means what? So GDP stands for Gross Domestic Product. But the moment we use this word domestic, so what do you understand by the word domestic? How you define this word domestic? Obviously you must be thinking, so what are you talking about? Domestic basically means the boundaries of the country, obviously, but along with that, while calculating the national income, we also include what other activities? Of the economy, that is need to be discussed for sure. Is it clear everyone? I hope the stage is set. You are now aware what all things you are going to learn in this particular session, and if you are ready to start this discussion with me, I would request everyone, do give me yes sir in the comment section so that we can begin a very important session, and that too on a very important topic, that is GDP. If I ask you, what do you understand by the word GDP? You will always say that sir, GDP का मतलब है Gross Domestic Product. It stands for Gross Domestic Product. अगर मैं हिंदी में कहूँ तो we call it as सकल घरेलू उत्पाद. लेकिन क्या कभी आपने ये सोचा है, have you ever given a thought that how this GDP is calculated? When we say domestic, what does this domestic basically means? What all activities are included? What is the difference between domestic as well as national product? What is the difference between gross and net product? All these things will be discussed in this particular session. So first of all, whenever we talk about GDP, now the first thing which comes in our mind is, so GDP data is basically used in order to calculate what? So GDP data is basically used in order to calculate national income. So I'll start my discussion with this term itself, that what is or what actually national income is. So please pay attention guys, this is going to be very interesting. If I start my discussion, rather than describing what is GDP, if I want to describe what is national income, then I would say the word national income, the word national income is quite different from GDP, and we use GDP in order to calculate the national income. So before I discuss with you the concept of national income, I would like to discuss a concept that is known as domestic territory. I would like to discuss a very important concept, that is domestic territory. As you can clearly see on the screen, one, we have political boundary, other we have domestic territory. So what it basically means? See, domestic territory includes what? So domestic territory obviously include the land, I would say the area under the map. This is the physical map we have. So the entire area inside the map is domestic. That means it is the part of India. And whenever we are talking about domestic, obviously we are talking about this region itself. We are talking about all these regions itself. That's quite obvious. But along with this, when we say domestic territory, it includes what else? Then my answer is, sir, it includes air and water territories as well. Not only land, it includes the air as well as the water territory. Along with that, it includes all other operations which are done in one nation with respect to the other nation. So let's get started with the term that is GDP, how we define the term GDP. I'll go word by word. Please pay attention. So if I go word by word, I would say GDP, that is gross domestic product. That is gross domestic product. So see, as the name suggests, the word gross basically means what? So the word gross basically means total, and the word product basically means goods as well as services. It basically means goods as well as services. And the word domestic basically refers to what? So the word domestic basically refers to the boundaries which I just discussed with you. So whenever we talk about GDP, whenever we talk about gross domestic product, while calculating the gross domestic product, we basically talk about the total goods and services which are produced, manufactured within the domestic territory of the country, which include not only land, even your air as well as your water boundaries. Now, if I'm talking about the term goods and services, I need to take an example over here. Let's consider this is a nation. Let's consider this is a nation. If I'm considering this as a nation, and in this nation, let's say a product is manufactured and the product name is car. There is one service provided. Let's say the service is cab service. When we calculate GDP, na guys, it is basically the total goods and services within one financial year. We know this very well. It is within one financial year. The moment I use this word one financial year, it means the number of goods which are produced within India. Let's say car. In India, in one financial year, let's say 10 units of car were manufactured, and cab services in 1 year, let's say 20 customers were given the service of cab service or given the cab benefits. So in total, what is going to be GDP? So GDP is total goods and services within the geographical or within the domestic territory. So if I add them, that is 10 units of car plus 20 customers. So the total is going to be what? So the total is going to be 10 plus 20, that is 30. Say yes or no? No, sir. No, sir. First of all, you cannot add these two commodities because their unit is different. You cannot add units into customers. That is not possible. So if it is not possible, what would be the solution? So the solution to this scenario is, when we define the term GDP, the next term which we need to understand is GDP basically means, please pay attention, sum of value of final goods and services provided within the domestic territory of nation in one financial year, which means now we'll not add them directly. We are not adding the value, we are not adding their quantity. In order to add them, we should bring down them on a same unit, and the same unit is going to be what? That is rupees. So let's suppose car which was manufactured in India, 10 units, its price is, let's say, 100 rupees, and the cab service which is provided, let's say the cab service is provided to 20 customers and each service cost is, let's say, 10 rupees. So if I add them, now 10 into 100 is going to be the total value of final goods. Final good means car is the final good. Car must have been installed with seats, car must have been installed with engine must have been installed with piston, along with that n number of screws. Then car is installed with the entertainment setup, or the entertainment, I would say, entire setup in the car. Then car also include tires. So I am not adding these goods because these are not the final goods. What is the final good? So the final good which is finally going to be consumed, that is car. If car is going to be finally consumed, that is going to be what? So that is going to be my final good, and the moment I include the price of car, in the price of car, the value is already added. This value is already added. So from here, the next point is 20 into 10 is going to be 200. So the total value of goods and services, now you can add them quickly. This is going to be 1200, and this is known as what? So this is known as GDP. If you're still doubtful about this value and final goods, I can explain you. I can take an example on this. Please pay attention. Let's say farmer is producing wheat. Let's say farmer is producing wheat. The same wheat is purchased by flour mill in order to produce flour. The produced flour is converted into bread. The produced flour is converted into bread by a company, and the bread is being converted into cake by a baker. It is converted into cake by a baker. Okay. Now let's suppose the price of wheat is 5 rupees. This 5 rupees wheat is purchased by the consumer, by you and me. No. We are not consuming it. I'm taking an example. The entire wheat which was produced in the country was purchased by the flour mill owner, and he's not finally consuming it. Rather, he's converting it into flour, and the price of the flour in the market is 10. So if I say floor price is 10, in this 10 rupees, 5 rupees value of wheat is already added. So I'll not add 5 rupees again. Now this 10 rupees flour was entirely purchased by the company, and it has converted it into bread of 20 rupees. 20 rupees bread was entirely purchased by baker, and he has converted it into cake for 50 rupees. So now, as you can see, if I add all of them, what is going to be the total? So the total is going to be 50 plus 20, 70, 70 plus 10, 80, 80 plus 5 is 85. But actually 85 is not your GDP, because in this few goods, or I would say all the goods, are counted twice. If I'm saying 5 rupees wheat, it is already included in flour. If I say flour, it is already included in bread, and if I say bread, it is already included in cake. So the product which is going to be finally consumed by you and me is cake. So the GDP of the country in this hypothetical example is going to be 50 rupees. That is basically known as final good. That is basically known as the value, or the sum of value of final goods and services provided within the domestic territory of the nation in one financial year. Is it clear, everyone? Is this point clear, everyone? Can you please tell me in the comment section if it is clear, so that I can move ahead? Now, let's move on to the next point. Now, the next point is, sir, when we say GDP, we say price of goods. But sir, the price of goods, it's very tough term to understand. The reason is, whenever we talk about goods, we define the goods price or better word is value, in two forms. The first form we have is that is known as factor cost. Second term we have is that is market price. That is market price. There is one more price in between, but I'm not discussing that point because that is of not much use. It will only confuse you. That price will only confuse you. So it's better we ignore that. We directly jump to these points, which is more than sufficient. So when we use this term, this term, and the term is practically clear in front of you, that is GDP. And whenever we talk about GDP, in the GDP we have a term that is value, and in terms of value we have two values. The first value we have two values. The first value we have is that is factor cost, and the other value we have is known as what? So the other value we have is that is known as what? That is known as market price. But the question is how you are going to define the difference between the two, or how they differ from each other. What will be your answer? See, in very simple terms, as I said that I have ignored one more price which is in between, that is not required. But if I say directly, and if we directly jump on these two terms, that is factor cost, and the next term we have is basically what? So the next term we have is basically market price. Factor cost is the cost. It is the cost of production. But the moment I say cost of production, you ignore the fact that cost of production include what all? So cost of production includes the heads of all. So it includes the first factor of production, that is land, which means if you are producing and you're using a land, you must be paying rent. Second one we have is raw material. So you must have paid for the raw material. Then you have capital. If you have borrowed the funds, then you are paying capital on it. And the third one is entrepreneur. So the one who is running a business, he must be running the business to earn profit. So entrepreneur commission, you can say, entrepreneur profit, you can say. It is also the part of cost of production. Got it, guys? It is also the part of cost of production. So profit, which means it is the bare minimum profit below which producer is not ready to produce, or I would say seller is not ready to sell. That is the part. This total value is known as factor cost. Now the same product, it will be sold at the time of sale. There are two new factors which will be included. The first factor is indirect tax, which is charged by the government. And the third factor, or the second factor in this case, is your subsidy. Now I'll take an example to explain you the same in much better manner. So please pay attention, guys. You are going to enjoy this. I think you are going to understand GDP for the very first time. So if I go in this manner, then I would say cost of production. Guys, I'm taking a hypothetical example to avoid few doubts in your mind. First doubt is, so factory has produced a product, then it will be purchased by the wholesaler. The wholesaler will be selling it to retailer, and retailer will sell finally to the buyer, and their profits will also come in the picture. The GST, which is going to be charged by factory to wholesaler to retailer, they are also going to be charged. I'm ignoring those points for time being. I will be discussing that in the near future. Right now, what I will be saying is, so let's take an example. One of my friend is a manufacturer, and he manufactures, let's say, marker. And he is manufacturing marker on his own land. He is owning that particular land, and on that same land he is producing the marker. In front of his factory he has a shop. Where he is selling these markers. He's not doing any kind of sale of its marker anywhere else, anywhere else. I said, fine. Now, I was sitting with my friend and I was very eager to know his income. I asked him, what is your income? He replied that, sir, my income is, you can see, I sell one marker for 20 rupees and I approximately sell 1000 units, let's say 100 units every day, 100 units every day, and remember that 100 units every day, and in a month I work for 30 days. In a month I work for 30 days, and after this sale, my stock is zero. After this sale, my stock is zero, which means if I'm producing 100 in a day, I'm selling 100 in a day. There is no stock, nothing is maintained overnight, nothing is holded overnight. This is again a hypothetical example to avoid your doubts. So I said, okay, that means your per day income is 2000 and the amount you are receiving in a month is 2000 into 30, that is 60,000 if I'm not wrong. So this is his income. Sahi hai na? Yes, this is his income. Income basically means I'm talking about his receipts. Income basically means I'm talking about his receipts. But he's not a serviceman. He's not a serviceman. He's not having all the amount in his pocket, out of which he is bearing certain cost of production. Then he will be earning certain profit, but I'm not concerned about it. Why I'm not concerned about it? Because I am on a survey to calculate GDP. So I want to know the value, the final value of good produced by him. The final value of goods produced by him is 60,000. I was supposed to write his contribution to GDP in a month 60,000 and in a year 60,000 into 12. I was just about to do that. But in a while, when I was doing this, a customer came to his shop. He entered in front of me. And the moment the customer entered, he asked for one marker. My friend, he gave him one marker and asked him to pay 22 rupees. I was shocked. I said, what is this going on? You have wasted my entire day saying that you received 20 rupees against a marker and now you are calling him to pay 22. This is pretty wrong. You are cheating me. He said, no, don't worry. Listen to me. He said, 20 rupees is the amount which I receive. But the moment I am going to sell the product, there is a term that is GST, which comes in the picture, and GST, let's suppose, is 10% on this product. I also know there is no slab like 10%. It's all the example going on. So 2 rupees is the GST. So the value is going to be what? So the value is going to be 22. I said, okay. I said, that means there are two prices. One price that is received by producer. In my case, producer is seller. So I am removing that pinch of doubt, which I will be clearing ahead. So producer or seller, one is received by producer or seller, and the other price is paid by consumer. And there is a difference between the two. The price received by producer is known as what? So that is known as factor cost. And price paid by consumer is known as what? So it is known as market price. So can you build a relation? Yes, sir. Yes, sir. Relation is in front of you. There is no rocket science in this. And the relation says factor cost plus GST, or rather I would use indirect tax, is equals to market price. I got to know one answer. That is, I got to know one new thing in my discussion, and the new thing which I got to know is really very important, and that new thing says what? So the new thing says factor cost plus indirect tax is equals to market price. I said, wow, I learned something. Now, once I have learned all this discussion, next day, the very next day, I went to buy an LPG cylinder and the year which I am talking is 2011. Why I have mentioned 2011? Because after 2013 the changes have been done in the subsidy which is provided on LPG, but earlier the subsidy distribution was something different. That is, today it is direct benefit transfer, earlier it was not direct benefit transfer. So I asked the LPG cylinder seller, I said, I want to purchase an LPG cylinder manufactured by Indian, and Indian is itself selling it through its units all over the country. I said, what is the price of LPG cylinder? He mentioned, so 400 is the price, 10% is GST again, and the value is going to be 440. I said, very good. I said, this means this is the factor cost. This is the market price. And I went to the manager of the LPG cylinder agency and I said, please make a call to your higher authorities, your managing directors, and tell them Madhav Arora is our customer and he knows that you are receiving 400 rupees against each and every cylinder. The manager sitting in front, he replied, sorry sir, you are wrong. I said, what? I said, what? How come I wrong? I am pretty correct because I have learned the entire concept yesterday only from my teacher. He said, no sir, there is a problem. The problem is, if you ask us what we are receiving, if you ask us, we are receiving 900 rupees against each cylinder. I said, how is it possible? That is impossible. He said, so please listen to me. We are receiving 900. Out of that 900, 500 is paid by government. Rest amount will be charged under GST and the left out amount is going to be paid by consumer. So market price is what? Paid by consumer. Paid by consumer. Factor cost is what? Received by producer or seller, and I am assuming producer is equals to seller. So from here we have a new formula which says factor cost minus subsidy plus indirect tax is equals to market price. This is what we actually have the relationship. The moment I got this relationship in my mind, one thing which I would like to discuss, this is the subsidy, please pay attention, this is the subsidy paid to seller or producer. This is the subsidy paid to seller or producer. These days, government has come up with a new picture. How government has come up with a new picture? So these days what government is doing, government is paying the subsidy to the public. For example, I'm taking an example again guys, just to relate my above example. For example, today I go to Indian again to purchase an LPG cylinder. I ask them, what is the price of LPG cylinder? They mentioned, so the price of LPG cylinder is 900 plus 90 rupees is the tax. So you need to pay 990. You need to pay 990. I said, that means this is your factor cost. This is your indirect tax which you charge on the consumer, and this 990 is going to be market price. The manager said, yes sir. Now after almost 13 years, you have learned the concept of factor cost and market price. I said, brilliant. The moment I purchased the cylinder and I updated the purchase as per my account details, after few days or after, let's say after a day, I receive a credit. I receive a credit of 500 stating subsidy on LPG. Subsidy on LPG. Now this subsidy is given directly to the buyer. Subsidy is given directly to the buyer, and if subsidy is given directly to the buyer, it won't be included. It won't be included in this formula. So in that case, factor cost is again the same. Received by seller or producer plus indirect tax is equals to amount paid by consumer, which is 990. Later on you are receiving 500. That is your and your government call. The producer has nothing to do with it. From here I conclude one discussion, that is GDP is calculated in two formats. One is GDP at factor cost and the other one is GDP at market price. Guys, you know what? When you go through with n number of newspapers, when you go through with n number of newspapers, in those newspapers, whenever you find a term, whenever you find a term, whenever you find a term that is GDP, if it is written only GDP, if it is written only GDP, then remember that only GDP basically means market price GDP. But if it is written GDP at factor cost, or maybe GVA, that is gross value addition, that is a GDP at factor cost. So remember that right now, India is the fifth largest economy in the world. And this calculation that India is the fifth largest economy in the world is done on the basis of GDP only. Before India, we have US on the top, then we have China, then we have Japan, then we have Germany, and then we have India. Remember that as per the latest targets, as per the latest updates, China is going to surpass US, is going to surpass US economy. As per the predictions, China will become the world's largest GDP in which year, sir? As per the expectations, China will become the largest GDP, or the nation with largest GDP, by 2035. Not only this, there is a prediction. Not only this, there is a prediction or calculations related to Indian GDP as well. India will become world's third largest. GDP, third largest economy by 2030. Some of the reports, they are estimating that India will become third largest economy even before, by 2027-28. So this is the prediction which is done by different authorities. But majority is saying that India will become the third largest economy by 2030. Not only this, there is one more statement which you need to remember. India will become world's second largest economy, that is just after China, by which year? So if I talk about that India will become the second largest economy by which year, I need you all to find this question, to find the answer of this particular question, and do mention the answer in the comment section. Because in July 2024, there was a statement given that India can even become second largest economy by 2031, but the actual data which are predicted earlier, that by the international organizations, for example Goldman Sachs, it said that India will become second largest economy by 2075. But according to MD Patra, there was a news in 2024. Please go through with that news. What he has mentioned, that India can become the second largest economy by 2031. What was his logic behind that particular discussion? That is also important. Got it, guys? Now, come back to the point for which we have joined this particular session, that is a point on GDP. That is GDP. If I talk about India GDP base year review, if I talk about India GDP base year review 2024, I don't know how many of you have checked. I don't know how many of you have checked this particular news, but yes, this news is trending. If I share my screen with you guys, if I share my screen with you, just give me a second. See, I think you can see my screen. The moment I have written on the screen that GDP base year India 2024, n number of updates have been there 2 days ago related to India's GDP, Now, if let's say, let's open any one of the news, let's say we go with this one. It's a free source which is available. If I go with it, just give me a second. Hanji. So Government of India is set to update the GDP year for calculating GDP. So which means currently what is the GDP base year? So currently the GDP base year is 2011-12, which is going to be updated to 2022-23. The first question, sir, after how many years GDP base year is revised? Practically, guys, there is no correct foundation, there is no correct description, but generally it is revised on 5-year basis. So 2011-12 was the I would say the base year which was decided almost 10 years ago, almost a decade ago. Later on, when we were expecting a change, or we were expecting the revision of the base year, that was around 2020, because from 2025 to from 2015 to 2020 base year was 2011-12. In 2020 or 2021 we were expecting that this base years need to be revised, but unfortunately the global economy, or I would say the world, was hit with COVID-19, and whenever base year is decided, it is generally, I'm not saying any rule, generally it is the most stable year in the last 5 years. So practically we were expecting 2017-18 to be decided as a base year for 2020 to 2025, the next 5 years, but due to COVID that revision was not done. And now once the economies, they are recovered out of COVID, now finally there are talks that yes, India will be revising its base year from 2011-12 to 2022-23. So this information was given by Minister of State, independent charge, the Ministry of Stats and Program Implementation, the Minister of State of the Ministry of Planning, and Minister of State in the Minister of Culture. The name is Rao Inderjeet Singh. He has replied, or he has given this particular statement. To oversee this particular transition, 26 members Advisory Committee on National Account Statistics, which will be chaired by Biswant Goldar, has been tasked, which is going to identify on what or how this transition is need to be done, because all the calculations will be revised. So as we have discussed, now government has also taken measures to enhance this point. The first one, they say standardization data structures, leveraging administrative data and economic census will be utilized in order to come up with the same. New monthly labor force estimate. So starting January 2025, Ministry of Stats and Program Implementation will release monthly estimates of the periodic labor force survey on monthly basis. This was also updated in the same. If I go with one more information, then let's jump to, let's say, business standards. If I jump to business standards, as per business standard information, they have also highlighted the same. So we are expecting that India's base year to calculate GDP growth estimates is going to revise from 2011-12 to 2022-23. Is it clear, everyone? Is it clear? So the government intends to release GDP and CPI data under the new series starting in early 2026 as per the data. So this is all information which is present. We are waiting for much more information on the same so that we can discuss this in much detail. But if you want to talk about GDP, if you want to understand the term GDP, then remember GDP is a very important concept, as we have discussed today, and there are many more important things which are need to be discussed in the same, which we will be discussing in the upcoming sessions to go. I'm pretty sure you must have understood the concept which we have discussed related to GDP. Now, whenever you read a newspaper, you will be very clear after reading a term that whether it is GDP at market price or GDP at factor cost, what is base year, how base year is decided, how often base year is revised, and which year is generally taken as the base year for the upcoming financial years to go in order to calculate the GDP estimates. Got it? So that will be all from my side, guys. We'll catch you in the upcoming sessions to go. If you want to learn each and every concept in this much depth, you need to join our RBI Grade B Lakshya batch for RBI Grade B 2025 examination to assure your short selection in the very first attempt. Good luck, guys. Take care. We'll catch you in the upcoming sessions to go. Good luck. God bless you all. Bye-bye, guys.